Hope everybody's having a great week and everybody's getting ready for the holiday season. This is 50 pips, 22nd of December, 2013. Not making any trade calls or recommendations because you and only you are responsible for the trades you may decide to take. And the fact you're listening to this means that you've read, you understand, you accept all the disclaimers, understanding that we're just performing some technical analysis for educational purposes only. So guys, what up? Well, basically, I was really hesitating. I thought I wasn't going to do a video, then I thought it was a bit of a cop-out, so I'm going to do one anyway. The main reason I wasn't going to do one is because the next weeks are just going to be a bit dead, so I don't want anybody to think that I'm going to be going into next week trading full size like crazy, trading all the time, right? Because I probably won't be around most of the week. So keep in mind, tomorrow I'll be around all day. Pretty much, so it's pretty much a full working day for me, day in the office, even though I'll probably not be too active, but I'll still be around. So keep in mind that next week's essentially dead, right? 24th, half day trading, 25th, markets are closed, 26th, US is going to be open, but pretty much everybody in Europe is going to be away, and then Friday, who's going to bother to come in on the office on Friday, right? So keeping that in mind is that you can have a lot of quick moves and 50 pip up and down, 60 pips up and down that don't really mean anything. It's just because of the liquidity, right? There's less liquidity in the markets, etc. So it's clearly not the kind of market you want to go in trying to scalp on a 1 minute chart. It's clearly not the kind of market you think, oh, I'm in a good trade, I'm just going to leave a 30 pip, 50 pip trail and I'll be safe, I'll come back after the holidays, because most likely you're going to be taken out, right? So you have to be smart, you have to understand that there's a time to rest and there's a time to trade, and the next coming weeks are going to be a bit tricky, right? So I'm not sure if I'm going to do an update next week, probably next Sunday, which would be the 29th. We'll see. I'll be in and out. I might be on Twitter on the 27th, and then for me, pretty much the 30th will probably be a full day in the office, so I'll be around on the 30th, and then we can update there. I'll probably do some kind of update. So bearing that in mind, I didn't want it to be a cop-out, so I'm going to go through the charts, but I don't want to, I'm just going to give a very general overview. So levels to watch on closing basis, etc. if you're around, or if you're looking for structural levels to be interested if you want an alert there or whatever. So basically gold heavy, what's happening, we're starting to base a bit. I think again, the downside remains vulnerable as long as we hold around this 1200. Now keep in mind, this kind of formation pretty much indicating that we might have a short-term bottom in and a bit of an upside action. Keep in mind that as long as we don't get a daily close back above the 1250, this is going to most likely continue to trade sideways to heavy in the following 2 weeks, right? So in these kind of weeks, we'd probably expect to see some kind of sideways or sideways chopper move in the latest direction we've had going into it before the volumes start to come back in. Should we break aggressively lower, 1150 level to watch, 1125s, I think those are going to be very interesting levels to watch and possibly interesting levels for some structural longs too. We'll see what happens, but right now, chop here. To really see pressure off, we'd have to get a daily close above the 1250 level, okay? So looking at the futures, what's going on the ES. So ES pretty pure last week, really into the FOMC, etc., etc. What are we been saying? We've been talking about this, and we've been talking about the fact that this has been aggressively bid, and there's no point to get stubbornly short or try and fight this, even though there have been a lot of cases where intraday has been interesting to look for some tactical shorts. We also said in the latest update we expected any move correction into the 1750s to be supported for potentially a quick move back up into the 1800s, and we would consider a move back to at least that 50 moving average to be a start of a correction, but we'd expected it to get bought aggressively. Played out quite nicely, and we're trading at new highs. Again, just a reminder, for the moving averages on the charts, they're usually on the daily. If it's green, it's a 50. If it's gray, it's a 100. And if it's black, it's a 200, okay? So right here, keep in mind what's going to happen into the end of the year. A lot of people are going to start talking about window dressing, etc., etc. You'll see people starting to talk about what to expect in January on Euro. They'll be talking about January effect, etc. Those are things we'll talk about coming closer to the new year too. But keep in mind that again, the level to watch from a closing basis is going to be the 1800, and unless we close below the 1800, then path of least resistance will probably still remain to the upside. The levels I'm watching are 1843. Not much before that, even though there'll probably be some kind of resistance beforehand. Then I'm focused on the 1800, and if we break down, then I'll be a focus on that 1780, that 50 moving average. Unless we get a daily close below that, I will continue to look at this as sideways chop or grind higher. Okay. What else have we got here? CAD, interesting. We've been looking at this for a while. I kept on saying on Twitter, keep in mind, watch those 07s, 07s, 0700, 700, key area to watch, right? And also, we also said, not only are those 07s key, like we're going to look at that on cable in a second, it was 07s, 06s because that was a major chop zone, but clearly price unable to hold above the 07s repeatedly. Clearly a lot of nice occasions to play the downside for a move back into those 06s still inside this range. Clearly the market not ready to go lower. All these wicks, these positive closes at lows here. We move back into here again. Beautiful action because we tried to get that daily close and then bam, above, just wicks, sold off hard the next day, nice little stop hunt to the upside, and bam, closing heavy. So as long as we can't get a daily close above the 107, 106s will likely attract. If we get a daily close below the 106s, then I'll be looking to this potentially to trade very quickly back into the 105s. I would consider a nice healthy retracement to be at least into those 105s, into 104s, and this 200. That's going to be more than a healthy. That's going to be like a proper retracement. If we get a daily close above the 107s, then I think this could start to move aggressively to the upside and squeeze more shorts out. So keep in mind that 07, 06 key, we get daily closes outside that and it starts to hold. Probably the next 100 pips in the direction of the daily close outside that range could come pretty quickly, but inside here it's just a bit of a chop fest, but clearly having trouble at highs. Kiwi, not a lot to say really. It's holding, still basing. This is a base. This is a big level. Big 50 back, confluence with the 200 moving average here. Clearly tried to press a bit below. The shorts had a very nice chance to get some pressure on here, couldn't. And now you see every time it's moving back into the zone, it keeps on catching a bid. So this is clearly the level to watch from a daily close, but unless we get a daily close below this dip low, probably very difficult for it to get some aggressive momentum to the downside, and unless we get a daily close back above these highs, probably tricky for it to get some aggressive momentum to the upside. But here is just a very big chop zone. Not too interested. Could be interesting support, but at the moment I think not something I'd really want to engage in, especially in these next 2 weeks. Okay. Speaking of the commodity currencies, we've got Aussie. What's going on Aussie? So we discussed this. We said as we were ranging around in this zone, we said, daily close below here, we'd expect us to go back into those 88.50s very, very quickly. Got into that level on the FOMC, couldn't break below. You see we starting this nice little rotation right here. As long as we get daily closes above the 88.50s, I'd expect this to slowly try and make its way back above into the 0.90 level. Unless we get a daily close above there, this will clearly still be pressure on. I'm looking at 09s to the upside and 0760s to the downside, but clearly this could be a chance to see a bit of profit taking, a bit of a move back higher. What do we got here on EJ? EJ, just quickly, because a lot of people were asking me about it. Not a lot to say. The only thing is keep in mind that we talked about this in these past days. We kept on saying, 104.90s, that's the level to watch. Unless you get a daily close below there, we look at this as sideways chop or grind higher. Reminder, structurally, our bigger outlooks, we're looking for this next year to move back into the 149 level. We haven't changed that outlook for quite some time. And short term, sideways to bid as long as we don't get a daily close below the 140.90. If we get a daily close below the 140.90, 139.10s, level to watch the downside for us. USD JPY, very similar thing. Structurally, no change. We're looking for a move back into the 107, 110s. We've been on that for a gazillion years. And again, slowly grind higher here. as long as we don't get a daily close back below, what is it, pretty much 0370s, 0380s, when we previous resistance that now is acting as support. Sideways chop to grind higher unless we get a daily close below there. If we get a daily close below there, then I'd expect to see potentially move back into 103.10s quite quickly, but that's another key level to watch from a daily close on USD JPY. What else have we got here in terms of quickly? GBP NZD. Interesting chart. Again, structurally, this 2 level is really, really important. You can look at it on a weekly with a 200 on it. You can look at it on a daily, but basically this is a very, very interesting level. Keep an eye on this. Daily closes above or below, weekly closes above or below, very, very important. But this could be the start of a very big structural move for a massive grind higher. So I think if we start to get, again, weekly closes above those 2s, it's probably not a good idea to want to be stubbornly short here. We're still sideways to grind higher on these. What else have we got in terms of the other pairs? Okay, we got Euro and cable. Let's look at Euro and cable. So what's going on Euro and cable on the weekly? And again, keep in mind it can be choppy. It's clearly having struggling at that 138.90s, basically 138s, keeps on getting sold around hovering around 137 here. I think structurally from the weekly, over the holidays, if you get a strong sell-off, what you want to look into base support to the downside is going to be those 134.00s, because you'll probably start to see that that 200 also on the weekly coming back into that level, right? If you look at it on the daily, it'll probably start to come back into that level. So 134s, that's going to be the key level to the downside in case there's a very aggressive move. If we see an aggressive move to the upside, no change, we're still looking for 140s, 141s, okay? I think the chart to keep an eye out for is the daily, and shouldn't be surprised here, right? This is the chart we've been looking at, so I'm not going to go through it again because we've gone through it a long time. But basically what we said is we had this big chop zone, right, in this rotation higher. These are 3 pretty much textbook long plays. You can go back in the other recordings. We've discussed all of them. We've explained them. Actually, we set them up pretty much live, a few of them even before they happened, call them live. And what's going on here? We said we were chopping inside this 134.50 into 134 to the downside, and resistance 136, 136.50. What we said, once we broke above, would be healthy to see a correction, and we said unless we get a daily close below the 136s, we're looking at sideways chop to grind higher and extensions from here. So that's the level to watch, right? So if we start to see daily closes back below the 136, then I'd expect that 134.50, 134 to come into play. Unless we can get a daily close below that 136, view is sideways chop to continued grind higher, okay? Cable, on the weekly, it's all about those 136.50s. It's still hovering around there. A lot of chop. Again, I wouldn't read too much into the weekly also because of the way this was trading going into the end of the year. I think what's interesting is to keep on focusing to a certain extent on the daily or on the 4-hour. And what we discussed is on the daily and the 4-hour, we said, don't get fooled by this whole 163.50, 162.50. This is a massive chop zone, right? So there could be a lot of velocity inside range, inside this tight range, but the velocity doesn't mean anything really. What's important is the daily close is above or below this range, right? And unless we get a daily close below 162, our outlook remains sideways chop to grind higher, okay? So right here, what's happening is we did pierce the upside. We couldn't attract any new buyers at highs. We got sellers coming in. Some people will be calling about a double top here, failed to take it out. Some people will be talking about triple tops, whatever. We still, our view is still sideways chop to grind higher. We haven't managed to close below here. We're still hovering along this level. So again, don't be surprised if in the next 2 weeks in very thin liquidity, both these extremes get tested. Right? They could easily get tested, but really what you want to watch are the daily closes and see how that affects. But globally, not a lot has changed. Again, I want to stress there's not a lot of edge in trying to trade aggressively in these times. It's better to take some time off. It's better to rest, get rested, refreshed, and ready for next year. I'll see you guys tomorrow. If you enjoy the content, again, don't be shy about sharing it. That's very much appreciated. As always, have an awesome one. Thanks for listening, and talk to you guys soon. Take care. Bye-bye.